how to use volume weighted average price to trade and make money using just this method, especially when it comes to day trading, because this is a daily indicator to trade off of daily trends. Okay, you don't care about what's going on with overall macro price action, but you just care about this day's price action to capitalize on this move. So to begin with, let's just take a look at what it is actually. Volume weighted average price is a technical analysis indicator used on intraday charts that resets at the start of every new trading session. It is a trading benchmark that represents the average price a security has traded at throughout the day, both on volume and price. VWAP is the most important because it provides traders with the pricing insight into both the trend and the value of the security. So I hope it makes sense. Let me explain how personally I utilize this method time to time. Of course, not always, but I'm showing you in this example SPY, S&P 500 ETF, because it is pretty liquid and it trades pretty clean compared to volume-less stocks. So I recommend utilize this method with something that is liquid and has very good volume. Of course, you can use it on any equities, but I'm just going to show you on SPY. So let's say this day right here, where you can see this purple line on my chart, volume weighted average price. And you can see every time price action on a 10-minute chart, I'm using 10-minute candles here. Every time price tests, as soon as the market opens, of course, before market open, it was trading below. Because pre-market, you don't want to pay attention too much to it. But as soon as market opens, you can tell when people come in, when volume comes in, when actual trading hour starts, you want to pay attention to it. And you can see every time it touched this level, it was acting as a support. But then close to the end of the day, what happened? It got below it with a very, very strong move down. It got right down below. Okay, as a trader, it takes sometimes days to wait that perfect opportunity to capitalize on. So what you do, you follow the price action next day, but this time around, you look at the volume weighted average very closely, and you can see this gray area on my chart. This represents pre-market, after-market hours. It stays below it, but I don't care much about this part, but I care about what it does during market hours. As soon as market opens, you can see price stays below this volume weighted average price. And let me zoom in a little bit closely so we can see what's going on here. You can see this price action is basically volume weighted average price acting as a resistance. And stock comes down, chops around here, but it never crosses back above. It acts as a resistance, consolidates. So now as a day trader, if you just know simply how to draw support resistance lines, you know this line right here, 507.50, acting sort of a support, and it can, of course, anytime and moment get right back above this volume weighted average price, come right test it, and then go higher, but it doesn't do that. So you didn't pull the trigger throughout this time because you were not certain. Price action was very choppy, but you knew that this support, as soon as this support breaks below, you are waiting for a trade. Why? Because you know on a daily chart, also on an hourly chart, you have the support area of 504, 505. How do we know this support area? If we switch to hourly chart, you can see from here a couple days ago, this is multi-day support area. And I'm going to show you how many times it bounced from here on a daily. 1 day, 2 days, 3 days, it bounced off of this area. So we are looking at this area as a support again. So let's go back to zoom into 10-minute chart, since we know that as soon as price action slips below this support area that we drew at 507.5, as soon as it breaks below, technical comes back, tests this level, but cannot break above, and it starts sliding below. And if you are a trader, you know that this is a perfect setup to follow this price action and basically follow this price all the way to the support, because you know at this point short sellers, bears in control, momentum is still to the downside. How do you capitalize? I do capitalize mostly using options. Pay attention to time, 11:05. Let's say you even were a little bit late. You were not certain that it would break even this support level right here, and you got in at 11:15, let's say somewhere here. So let's go to take a look at the daily options now, because the plan is to day trade SPY trading at around 506.77, and our goal is to say, okay, so it can come down to all the way 505, so another $1.70. So we take a look at the 506 outside of the money, but not too far outside of the money puts, which are at that time 11:15, 11:20, is trading at around these levels of let's say 20 cents, 15 to 20 cents. This is where we were following price action, and we can come in at 11:30, somewhere here, 20 cents, whatever, 25 cents, 30 cents. We get a fill, and we know that stock has, well, risk reward is on our side. If it does fake out, no problem, we can stop out any moment. But at this moment, when you're trading so late into the price action, and also assuming that these contracts are about to expire in about 30 minutes, you need to know that any move, any flush against you, you will instantly be down 50-70%. But considering that, we are shooting for 3-to-1, 4-to-1 risk reward trade. So let's say our average price to get in, very small size, let's say $250. So we got 10 contracts at 25 cents. And we're not going to wait stock to hit all the way $505. We can wait it go all the way to here, maybe 80 cents, ride it out about 30 minutes, get out, because we know that 505, if we go back to SPY chart, that 505 as a support into the end of the day. Some people may have been watching it to buy long, and some people may have been watching it to cover their short. So naturally it can go up from support level, and what it basically, that's what it does. But even though it happens, you were out all the way right here, well before this price action even tested this 505, because you got in at this candle and you didn't ride this stock for too long, but you were confident that the momentum was to the downside, and you did ride it just these 4 candles, and you didn't wait for this candle, and you saw this price action go up. So basically, just by following price action throughout the day and capitalizing on these 4 or 5 candles, which is 30-40 minutes, you were able to walk away with 300-400%. But at the max, it was from 25 cents all the way to $1.10, which is 400 and something percent, 500%. So I hope this makes